Hi guys, welcome to the channel. I'm Seagram Pierce if you're new here, and we're talking about the business of photography. Let's take a look at the business structure. If you're a solo entrepreneur, which is how most of us start out, you form the core of the entire business structure. You can't yet detach yourself from any of the aspects that you need to handle in each of these departments. For this video, I'm going to assume that you have the absolute basics down. You perhaps have a logo, a website, an email address, and a phone number for clients to phone you at. If you plan on building a house, you need some sort of plan or structure of what that house is going to look like, especially when it comes to where the rooms are, how it's going to look, where the windows are. Your business structure is just as important, and it's actually no different. It's how your business looks from a legal standpoint in an entity-based way. This will vary a little bit depending on where in the world you live, but each country has their own forms of business structure, but they kind of have the same style to them. And the two types of business structure we're going to look at is going to be either a sole trader or a Pty Limited or an incorporated company. Let's take a look at the simplest business structure form that you get, and that is a sole trader. Numero uno, just you. You can be a sole trader and operate your business under your personal name. If you wanted to, you can use a trading as byline, which helps you to use a business name in case you don't want to use your own personal name. But still, when it comes to your legal and your banking documents, you're still going to have to use your personal name because that business isn't an incorporated business. Now, depending on your income levels, the simplest way to operate a business might be being a sole trader. Being a sole trader has pros and cons, just like everything. So it's helpful that we take a look at them and then we can kind of decide what works for us. So let's take a look at that. On the pro side for being a sole trader, the first is you don't require large amounts of capital to start up a business as a sole trader. Secondly, there's no legal registration needed because you're operating under your own name in your own capacity. There's only one owner, which is you, which means you have full control. No one else can tell you what to do. And that's helpful at times. You as the owner are entitled to all the profits that business derives. You don't have to split it with anyone. Being a sole trader means that there's very, very basic rules and regulations when it comes to how that structure is put in place. And also, it's also really easy to dissolve or just discontinue the business because there's no legal entity there. On the con side, you can't raise capital for your business because it's not a legal entity, and you're going to be hard pressed to find someone that's just going to invest in you as a business when it's just you. Secondly, there's no legal entity that represents that business. It's still just always you. Thirdly, there's unlimited liability. And this basically just means that there's no separation between the business assets and liabilities and your personal assets and liabilities. This also means that if the business doesn't do well, someone could, if they wanted to, come after your own personal assets, which just means that you run at the highest risk. You're then also going to be taxed in your personal capacity under individual rates. Whatever income that business makes, that income comes to you and you're going to be taxed on that amount. Lastly, you as the owner carry the highest risk personally. If anything goes wrong, the only person someone's going to come after is you. Forming a Pty Limited is actually relatively easy to do if you live in South Africa, and you can do it for a couple thousand rand. These Pty Limiteds or shelf companies are just rebranded for you and then registered with a CIPC if you're in South Africa. These incorporated companies often come with a bank account associated with them, which allows you to start doing your financial movements through the company. It's not necessary to get it with it, but you know what? If they do it, it's a one less thing that you have to do personally. If you've got a business partner perhaps, and that's a whole other discussion, this is where your share amounts would be legally stated. Example, I get 50% shares and 50% shares to Bob the Builder. If it's just yourself, then it's just 100% shareholding to you. You're now also the director of that company unless you appoint someone else. But it's always good to be the director of your own company. We said we're going to keep this simple. So we're going to take a look again at the pros and the cons of what a Pty Limited or an incorporated company will do for you. So on the pro side, it is a fully legal entity. It's completely separate to you and your identity. Second, the shareholders have limited liability. Thirdly, company tax rates can often sometimes be lower than that of personal income tax rates. So this is worth considering as well. Company tax rates are fixed and they don't fluctuate depending on what your income is. You can have more than one owner in that company. On the con side, a Pty Limited or incorporation requires a higher startup capital than that of a sole trader. There's already that outlay of capital that you need to buy a shelf company and rebrand it, or the incorporation fees to begin with. You no longer have autonomous control. All the directors in that company have control over your business. The rules and regulations are going to be a little bit more complex. Fourthly, that company needs to be registered. In South Africa, that would be with the CIPC, which is the Companies and Intellectual Properties Commission. Your financial statements need to be compiled by an accounting officer and submitted to SARS, for example. That company must be registered as an employer with SARS, for example, and a director's salary is subject to PAYE deductions, which is pay-as-you-earn deduction. And there's a requirement to register for VAT when a turnover for a 12-month period is over R1,000,000 or more. That should make it a little bit easier for you to see which structure works for you, depending on where you are in your career and your business. If you're just starting out, you don't need to incorporate a company, as you may be disappointed to find out that you actually don't even have cash flow for the first 6 months starting out. Yet you have all these financial obligations that you have to cover with being an incorporated company. Or on the other hand, you may be several years into your photography business and things are taking off and your income is more than your expenditure. This is good because it leaves you with liquid capital that you can then put into other things. So let's wrap up how you're going to be setting up your business structure. The two main things that you want to pay attention to is how much liability do I want to protect myself from, and what entity makes the most sense for tax purposes with the amount of income that I'm making. Being smart about operating as a sole trader or as an incorporated company can save you a lot of money when it comes to tax. That wraps up this episode. Click here and it'll take you to the next episode for the next topic.